All right,
Hey, why can't
congrats.
they
Good
hear
morning.
you? Oh,
All
you probably
right.
want to unmute. All right, I see us. We're live.
There we
All
go.
right.
Yep. Now I'm
Cool.
off mute. What's up, everybody?
All right. So Monday morning podcast for a change, which is actually not a bad idea when we look to talk about markets. So a lot of interesting stuff going on. Friday you had everyone on Wall Street talking about taco. Trump
Yeah.
always chickens out. I would make the argument that the only thing that causes Trump to chicken out are higher bond yields, because I'm sure he understands that, if they ramp up bond yields, that messes everything up. Whatever reporter that was who hit him on it at the press conference, everyone who came into the weekend long is probably really pissed off about, because you knew that Trump was going to double down. And we did get some negative tariff news out. Also, I found it funny that when the courts kind of struck down the tariffs, you had some commentators saying, oh, maybe Trump will use this to kind of, walk away gracefully. And it's like, wait, you've been watching this guy? No way he's going to walk away. He's going to double down on this stuff. So, weird market this morning. Futures, when I woke up, were pretty weak. We kind of, gained all throughout the morning. Everything went green at the open, which turned out to be a head fake so far. SPY is, let me update my chart. Yeah, so SPY broke the 10-day. Before we got on, I did buy, I always own puts in my Ono strategy, but I did buy some more SPY puts. SPACs are the only thing working right now, which I've been telling people for the past couple of weeks. In my whole kind of Trump's inner circle is still cranking. I did get out of a lot of my Bitcoin exposure. I believe if you are a long-term investor, you want to have Bitcoin, but if you're a trader, it looks toppy. And, you had that interesting Vance meme going around where, Vance saw the Pope, he died. Vance went to India, they went to war. So, Vance spoke at the crypto conference. You got to get out of your crypto, at least for now.
Jeez.
Oh man.
Wow. That's like the new indicator. It's like the Greenspan briefcase indicator. It's
I don't know if you guys thought they had Vance is like the Grim Reaper. Then, they had the Pope, they had India, and then they had, Bitcoin.
Before I cut you guys off, wasn't there something about like Powell quitting this weekend? A rumor? It was all over Twitter.
These Bitcoin guys over the weekends, they just put stuff out there.
I see. I thought it was real. I didn't know.
When it's from like a Bitcoin guy, it's not real.
Okay.
And they're like Bitcoin ripping. I'm like, at first I'm like, oh my God, Powell is leaving. And I look, Bitcoin's not ripping. It's
Just
like,
flat.
All right. I'm glad I didn't put that out anywhere because it's been dumb. All right, go ahead, Jay. What do you got?
I'm watching some levels too, and I can see SPY. The chart was not very appealing this morning to me for even day trading, so I just stayed out of futures. But we're looking at liquidity all the way down. If we're looking at SPY at like 578.50, if we crack that level, we're in trouble. We could see a total reversion down to like 565 pretty quickly. So yeah, I'm looking to maybe start operating in the realm of selling to open some puts on some things that I tend to wheel trade, if that happens. If not, I might be able to just take advantage of some volatility and let it go sideways for a while. Kind of not the most exciting market, but there's three trends: up, down, and sideways, and we just trade it as it comes.
That's brilliant.
It works. I can push my day trading skills into swing trader mode and just ride any one of those trends. As long as I'm selling options and making income, I could care. Make the market
Just
move.
so everyone knows, Jay does have good day trading. He puts trades out all day, so it's not like he's not doing stuff. Just so you know. It may sound lame online, but he actually does stuff, by the way, during the day. He really does. And they're good ideas, too. Trust me. All right. Should I introduce the guest?
Absolutely. We can do that now because, like I said, chart's not that exciting to me today. I might scalp a little bit of
Dan,
sideways.
Do you have any thoughts on the market, Dan?
Thoughts on the market. China's treasury holding fell below the UK, which I thought was interesting. That happened overnight. Japan is crushing China. It's almost like pre-World War I, where Japan actually took over China. And oddly enough, I think the Cayman Islands, which no one talks about, there's like 2,000 registered companies, which are all, you guys understand this. They're all like ETF companies that are buying these, 0-day, to expiration options. They're killing it in the Treasury Department because everyone's using the synthetics, and they're using Treasuries to gain liquidity to play these options. I think that's fascinating, and no one's talking about it.
I mean, I didn't know anything about that. So let's.
Well, let me do the intro, and then why don't we go right to 0-day options? First
We got a
of
lot
all,
to talk about.
this is Mr. Cash at Mr. Cash 66 on YouTube, Dan Cash. First person Matt ever asked me to bring on the show. So that's a win. He's from Boston. It's another huge win. And he's cooler than me, actually, which is hard to say. And it's like I'm joking saying that, but he's a very cool dude. So in an attempt to be as cool as Dan, I'm doing this for the very first time. I'm bringing the shades on this day.
Please don't do that.
All right. So Dan Cash, ladies and gentlemen, here we go.
Thank you for having me.
Absolutely. A pleasure.
Go ahead, Dan. Let's talk 0-day options, man.
I'm not really like a huge options guy, to be honest with you. I'm more of I like swing trading. This morning, so here's what I was looking at for Friday was Palantir. I didn't own any of it, and I feel like I missed the run up. And it has I don't know, it doesn't really make sense to me. The same thing with Tesla, with like their earnings and everything. But so Roundhill was doing this PLTW where it's 1.2, and today was their X day. So I had actually placed a trade to grab their dip and let it run. Trade didn't fill because the bid and the spread was too far, but it did drop significantly. The PLTW grabbed that this morning, swung out of it. But normally I'm an SPXU, which is the 4X Canadian on the S&P. And I love that. And I just scalp that throughout the week, multiple times a week.
Wait, that's SPXU. That's a Canadian?
SPYU.
SPYU.
Oh.
That's probably my favorite thing to trade right now.
Holy smokes. So that's funny you bring this up
Right.
because
So that's traded here, though. That's just a 4X levered ETN.
Right.
Yeah. Yep.
Got it.
It's got enough range where it's actually a pretty decent scalping chart. I can see that.
Right. The only problem for you is ETNs can't have options.
Yeah. And it's a good day trading and swing trading situation if it's levered right.
Yeah.
So what's the difference between an ETN and an ETF, Matt?
An ETN is so it's an exchange traded note, and it is backed by the full faith and credit of whoever is issuing it. I think
This one's
Max
Canada.
ones, I'm not 100% sure. I think they're Bank of Montreal. So this is backed by the full faith and credit of Bank of Montreal. Bank of Montreal promises, they're going to provide 4X the return of SPY. If Bank of Montreal goes under, this thing blows up.
Right. And I thought like you couldn't have 4X funds in America or whatever.
You can with an ETN. The rules in ETNs are different.
I
You
see.
can have as much X as you can get away with, I believe. Practically speaking, I think once you get much more than a 4X, I don't know that you're going to have a bank that's going to be willing to issue that. But that allows them to get a lot of the leverage. So my partners, the Rex guys, Rex shares, also run the micro sectors. They've been doing ETNs on sectors for forever.
So then why don't we do a 4X ETN? I mean, it sounds like something you'd want to do.
You need to get a bank to do it. No one wants to buy an ETN that's backed by the full faith and credit of Tuttle Capital.
Right.
Full faith and credit of BMO. So we are talking to another Canadian bank about that possibility. So we'll see. But, typically, not typically, they're issued by banks. And then, guys like me will get in on them, but it's got to be issued by the banks.
Got it. Okay.
And I don't trade them because I like options, and you can't have options on.
Got it.
And the one thing I want to point out that a lot of people don't understand with these leverage funds is that there's an overnight charge of holding. So a lot of people don't understand that it adjusts your cost basis. Like 4 a.m. in the morning, you'll get an adjusted cost basis. So for like some of these, it's like for every 10 grand, it's like, I don't know, 0.08 or 0.3, depending on the fund, it'll adjust overnight.
Really? So your brokerage account cost basis will change?
Oops.
Yep.
On an ETN, you mean? Yeah?
Yeah, because these are the
Oh, I see.
they get the 4Xs, they're borrowing intraday, and at the end of the day, they have to reset first thing in the morning at 4 a.m. So it'll adjust whatever their cost basis is for borrowing that money to get the 4X leverage.
Right.
Because all our 2Xs, we've got to adjust by the end of the day. And we're also paying financing charges. So we'll have slippage every day, depending on the financing charges. It will have more slippage over the weekend because you're paying, 2 extra days of finance charges. So, all things being equal, you'll see our ETFs erode by, anywhere from like 3 to 9 basis points a day. I don't think that impacts your cost basis, but just the NAV is going to erode a little bit every day, if the underlying didn't move.
Well,
What is your favorite ETF?
I don't have a favorite ETF. I mean, I like,
That's got 300 kids. They call them ETFs.
What's that?
I said you got 300 kids and they're all ETFs.
Right.
Yeah, I mean, of my ETFs, it changes. Right now it's our SPAC ETF, SPCX. SPACs are back, and
Right.
I teach people an investment approach called the H.E.A.T formula, and there are a bunch of different ways you could run it. How I do it is, I'll have 10 to 20% of my portfolio in options, and then the rest in T-bills. But I am now replacing that T-bill exposure with pre-merger SPACs, because now that pre-merger SPACs are moving, I like them much better than T-bills. So that's my favorite right now. I mean, I love asymmetrical opportunities and the mix of, Trump and what's going on in Bitcoin and just, the risk on appetite, pre-merger SPACs are the way to go. I mean, this one here, I've been watching all morning.
Oh, wow.
Holy
Look at this
dude.
thing. DLBR. Yeah, this is,
Holy
they're
shit.
merging with a gun company.
Which one?
Symbol's PEW, I think. I forget what the company is called off the top of my head. It'll probably come to me. They're trying to be the Amazon of guns. So you
Holy
can
shit. Oh, that company.
Yeah,
Oh,
yeah,
yeah.
yeah.
That was in the holdings of the guns. They sold off it's ammo, AMMO.
No,
sold
no,
off
no,
the
no.
ammo division. Yeah. And this is the stub of ammo, dude. I'm pretty
All
sure.
right, it could be the stub then. Okay.
Yeah. And it was like the Amazon of guns. And that's the reason everyone wanted to own ammo, but not because they made these ammunition, but because they own this, gun marketplace. This is huge. I didn't realize that.
Well,
Awesome.
and Don Jr.'s on the board.
Oh, dude, awesome. So, what do you make of that, Dan? So, Dan, let's move. So, Dan, Matt talks about buying things that Trump.
Hold
Go
on,
ahead.
let me
Go
just notate that. So
Yep.
I bought ammo back when it was over the counter back during Obama, because he was talking about taking everyone's gun rights away, and I'm like, perfect. Everyone in the woods is going to rush. Everyone in Michigan is going to rush to the ammo store and stock up. So I started buying ammo a long time ago.
All right. So, yeah, we had a fund that we just closed, but this was one of the holdings. Ammo. Let me pull
Yeah,
it
I don't
up.
think ammo is out there anymore now.
No, it must be this other company, Pew, that you said. I don't know what that is.
It's not public yet.
Oh, all right. So Matt's theory, Dan, these days is that anything that Trump, is touching, he's like the Midas touch. Any thoughts on that?
I mean, he wrote that book a long time ago that was with Robert Kiyosaki around the Midas touch. So that's actually kind of fitting.
Oh, wow.
I think what's happening is, we go into these, everyone knows them as the tail ends. I think leptokurtosis is going to be the new standard.
What's that?
Leptokurtosis is, if you look at a bell curve distribution, you get the tail ends at the end where we have these massive swings in volatility.
Oh, I see.
Now that Gen Z and millennials are trading on Robinhood and everyone's trading zero data expiration options and everyone's kind of like hip with the market. Everything Trump says, is just going to spike in volatility. And that might be the new normal. It might not be we wait for 10% a year average returns. It might be 15, 20% because everyone's doing it. I feel like this is like the new normal.
Dan, how long have you been trading? You're younger than us.
Well, I started in crypto. With stocks, it's only been maybe 4 years. But
when did you start in crypto?
2013.
Oh, okay. So a decent amount of time, but stocks only 4 years. Yeah. So on stocks, I mean, you hit on a key point. I really think COVID changed everything. So, I was there for the internet bubble. Retail investors got into that in a big way because they saw, hey, I don't have to sit here and earn 8 to 12% a year. I can earn crazy returns, but it was a different marketplace.
Mm-hmm.
You didn't have access to information. You couldn't trade lightning fast. The brokers were the gatekeepers of everything. Right. And when COVID came, you had all these people, all of a sudden they're at home, they're at their computer, their boss isn't staring over their shoulder. And, and they're seeing this new group of stocks and, seeing the same potential, like, man, why do I have to sit here and earn 8 to 12% a year? I can earn 100% a year. Now they've got things like Robinhood and Webull where they can trade lightning fast. They don't need brokers, and they're connected on FinTwit and Discords. So I keep 4 Discords up all day, every day, and we're going to start our own soon, Jeremy. At some point, be patient, but we're going to have our own Discord. And
got 4 children worth of patience.
What's that?
So I've got 4 children worth of patience.
Yeah, we're working on it. Tuttle Market Insights. Just wait.
I'm there, dude.
I think having these Discords up blows away having like CNBC on for seeing what is going on in the market. You're in the right Discords. These guys have their finger on the pulse. Whereas you get like Jim Cramer on, totally freaking clueless.
Oh, man. That takes me back. Every time you say Jim Cramer.
You had a lot to say about Discord when we chatted before. What's up with Discord, bro?
Yeah, I mean, it's the market's super transient. We're going out of like the boomer 60-40 generation into where no one wants mutual funds. They're just trash. No one wants closed-end funds. They're garbage.
Yep.
You can't return treasuries as fast in massive dips like this. So those are out the door, and they're trading like Bitcoin now, treasuries. So people are going to Discord, and I have 3 of them going right now. I have, we just launched Return of Cash, which is our own Discord, so we have bots programmed to just give you the fastest, market data, news headlines and everything. And that's getting launched this week. And we trade on
send us a link. We'll put it out there on all of our stuff.
Okay, I got your YouTube link.
Sure, man.
I got your YouTube link in the description, by the way, just so everybody knows.
Oh, cool. Yeah, I shared it. I shared it across, all my followers and stuff. And it's the thing's going off right now. It just goes off all day, and it just tells me everything that's going on, everything from Trump tweeting, Treasury news, what the Fed's doing. Iran overnight was talking about nuclear. We're trying to get a nuclear deal with Iran. I mean, it's incredible, really, and that's what we're trading on. And we have everything from scientists. We have a doctor. We have a lot of highly sophisticated people in our Discords that are like you guys said, they work a W-2 job. No one's looking over their shoulder because they're so efficient, and like we're all just trading all day.
And they can be totally anonymous, you know.
Right.
So you got one, you want to talk about any more? You got one return of cash. Is there a 2 and a 3, or you just want to go with that one?
Yeah, I mean,
I'm actually
that's the
interested,
one that
bro.
that's the one that I'm personally launching.
Yeah.
I have other ones, but they're not, I'm just a member of them.
Got
Right.
it.
Like I still hang out with bullish bears and keeping the mix there. And sometimes when there's a trade idea, I just can't help but post it in Discord, and it's like that. I mean, you get instant response. We went so far as to build like an RSS feed that would just pull from various news sources and have a bot just put out, whatever is hitting right now. And that's more important when you're scalping individual equities than it is when you're scalping futures. But it's a different marketplace than when you're in futures, because you're more or less watching the calendar for all the Fed events. If J. Powell's going to step to the podium, you can see him stepping to the podium on the chart on futures. It's that quick. But when you go into like all the secondary stuff, there's always something moving. Occasionally we'll see a penny stock that's just ready to rip, and get in ahead of everybody on that, because we're all talking to each other, and it's just that fast. It's just the communication levels are just insane. Love Discord.
So Dan, when we first chatted too, you also the one question you asked me was like, how do you start an ETF? How much is it to start an ETF? Because I think you have something in mind you want to discuss. So why don't we get into that, Matt? And why don't you tell us like how do you start an ETF, Matt, and how much it is and all that? Can you do that?
I can definitely do that. I've started a few.
Yeah, just a few.
Yeah, I can't even count how many I've started. Yeah, I mean, really, it is come up with an idea, write the prospectus. Different attorneys are going to be different as far as how much that's going to cost. Assume 25,000. Set up a website and submit the prospectus to the SEC. Figure 3 months or so. Assuming the SEC doesn't have major issues. They don't approve something. They just stop asking you questions and you're ready to go. Then you can launch, depending on the platform. Depends on how much it costs to run a month. For us, it's about $15,000 a month. And so, we're at about, depending on your expense ratio, 15 million in assets or so is break even. And then anything over that from a sponsor standpoint, you're making money. The key aspect, unfortunately, I mean, I hate that the industry is like this, but if you're not BlackRock, State Street, Vanguard, who have a lock and load on 97% of the marketplace, it's not just having a good product, it's also being able to market it. And that is not easy. I've got, 2 people a week probably calling me to launch ETFs that are convinced they've got, the most awesome product ever that's guaranteed to beat the market. And I've got to talk them out of it because, maybe you do, but you're not going to be able to market it, unfortunately. And beating the market with 500,000 in assets isn't going to move the needle. It's kind of the chicken and the egg, which is a shame. I mean, I had a guy come to me Friday, great product, a great idea, but, really no pathway to get assets in it, unfortunately. But Dan, you've got an idea for something you want to do?
So I had 2 ideas. One was going to be like a fund of funds. And it was going to be, so I developed I don't know how long you guys have been following me, but I've been interviewing all these different fund managers. I started with, Sylvia Jablonski. I went through.
I think I found you because you interviewed Cy and we run T-Spy for him.
Yeah, so he was in August. I think I was the first person to have him on. So I did Sylvia, Dave Mazza, Cy. I did Curve. I got all these guys to every single fund to pay on either Monday, Tuesday, Wednesday, Thursday, Friday, and we staggered them intentionally. So
you did that?
That was me.
That's cool.
Right.
I was watching that.
It took me like 10 months to convince these guys to kind of, and I didn't tell them I was doing it. I just filled the gaps.
Wow.
That's why they call them cash,
Re-
cash money.
Rex just came out. Rex just launched an ETF, and they just came out. Could have been because of you, and did Wednesday.
Perfect. Okay, awesome. So the idea was I created this quadratic formula basically that you would take, your X day dividend or whatever, and basically just keep buying the dip of the following day. And it's kind of like the marshmallow test where like it compounds at the dip every single week, but because they're every single day, it overlaps multiple times throughout the week and the month. And so that was the idea. But it kind of stemmed because E-Trade and Robinhood, right? You guys all, when you send the transfer agent, when the transfer agent sends out their distributions, E-Trade and Robinhood withhold the dividend until Monday.
Yep.
So it was screwing over all the dividend investors, which is primarily everyone watching this right now. So they weren't, like a lot of them on my Discord right now got paid this morning from E-Trade, from all like the Robinhood and not the Robinhood, Roundhill funds, or YieldMax funds, all got paid this morning instead of Friday. So I'm like, how do I synthesize?
Wow, they're earning the float.
Yeah. So how do I fix the flow pattern so that these guys can still get paid on Thursday and trade Friday? So that was kind of the idea behind it, and it kind of snowballed. So the first ETF that I was thinking about launching was just taking all of these individual fund of funds so that you could get paid every day, every single one of these that's already out there, and just kind of going like, all right, instead of spending 50 grand and getting a piece of each one, spend $50 a share and you guys can buy fragments of all of them. Same thing with the S&P, but just, a fund to fund. So that was one of the ideas.
That's interesting. All right.
So this is like basically, to recap, a fund that pays you a dividend every single day. Correct?
And it's across the platform, and it's roughly around S&P 500 related or NASDAQ related.
So Matt, where are we on our income funds? Is that still on the board, or what are we doing?
July.
July.
We're yeah. The problem is, all of these, covered call things, the Wall Street firms who are selling this stuff, who are doing this stuff are making a ton of money, but operationally they hate these things.
Yeah.
So the firm that we were going to do a lot of our trading with finally came back to us and said, look, we need to do some internal automation, because this stuff is just such a pain in the ass for us that we're not going to take on anything new until we do the automation. And that's July. So we will. But one of the things I'm working on is and I don't know whether I'll be able to do it or not, but paying out Monday, Wednesday, and Friday.
Nice.
Right.
That'd be cool.
Okay. So why don't we keep that one on, why don't we keep this on, let's keep this on the conversation for later. Maybe we can, talk about, doing something together in the future on this. Yeah, Matt, Dan?
That'd be awesome.
Yeah.
Okay.
Totally.
Yeah, sweet. So we'll talk about this later. All right. Cool.
And I just want to notate, you guys are familiar with the fiduciary trade, right? Where you use the premiums and treasuries to fund the covered call or whatever you guys are doing. A lot of people don't know what that is on the retail side, but they're mimicking that same trade using the dividend income they get to place their options trades. So it's the same thing as they don't know that it's called a fiduciary trade, because a lot of people don't understand how to trade treasuries, but that's what a lot of retailers are doing.
Wait. So say that again.
You'll like this.
I'm sure you're familiar with the fiduciary trade using treasury premiums, basically the interest you earn to trade options, so that worst case scenario, your option blows out and you don't get paid anything, right? You still at least get the treasury. So it's like a break even, right? So it's called the fiduciary. A lot of retail investors are using their dividends they get, say, on Friday to place trades. And they're going, all right, worst case scenario, if my trade fails, I still get the dividend, I break even.
Yep. Right. So if you get $100 a day.
Wait.
This is good.
So I own, so let's say I own T-SPY.
Yep.
I get a dividend on T-SPY. What am I buying with that dividend? SPY
Anything.
calls?
Long out of the money calls, just going
Yeah.
for it, killing it.
It could be anything. They're just going. They're trying to justify it. You know what I mean? Going like, if I lose the 100, I break even.
It builds asymmetric risk right into it.
All right, so this is so all right. So I think of stuff like this as almost like portable alpha.
Yep.
So I could buy whatever. So I could
Yep.
take my T-SPY dividend and buy MicroStrategy calls, whatever I want to do. Interesting.
No, I like it too. I mean, talk about this. Here's another good idea. Yes, talk about the shorting, the getting money from the Bank of China and then buying treasuries with it. Has that ever worked? Have you tried that? Or
Good
idea.
So I haven't tried China yet. I did try Japan, and
Right.
unfortunately, they only do mortgages. I tried Japan because they don't believe in debt. Historically speaking, Asian countries do not like debt, and so their interest rate, Fed funds rate, right now is 0.5. Ours is like 7.5. But most Asian countries and Switzerland are disgustingly low right now, which I feel bad. I don't really feel bad. Actually, I'm kind of narcissistically, like, I'm waiting to exploit them. So my next call is to Switzerland to see if I can get loans to try to, capture the difference in spread.
So what do you think of that idea, Matt? Borrowing from China at like 3% or 1% or whatever it is, and going long treasuries at 5 or whatever they are.
I mean, that's the forget the term. People were doing it with Japan.
The carry trade.
The carry trade. Yeah. I mean,
Right.
that's been going on for, as long as markets.
How about for like a regular guy though? It's really what it's all about.
Yes, I don't think so. I mean, I think you need
Some
to be able
experience.
to trade at kind of, institutional spreads.
Right. Got it.
Yeah,
Even if you bought T-SPY, right, or SPYI, it gives you 12% yield, and you're like, look, I'm making good money, and it didn't cost me a thing.
well, right. That's different. That trade I like. What I'm trying to wrap my head around is, I think so. I'm not a big fan of the covered call strategies, but I think they work from a retail perspective because I can, give you eye-popping yield numbers. And from a marketing standpoint, whenever you can do something where someone's like, holy crap, like, oh, you mean I get 83% yield on MicroStrategy? This is great. What I'm trying to wrap my head around is the interest in something like this. Is there enough interest that people are going to buy into this?
You know what? I actually really like it. I mean, when I heard him talk about it, I'm like, you know what?
Yeah, but
if you could package that and make it cool,
you're not a good
I'm
proxy for
Smart people?
the man. Yeah, well, I wasn't going to say it, but yeah, for smart people.
So, Dan, what's your second ETF idea, man? What's
No,
your
that
second?
was the second ETF.
Oh, that,
idea.
no,
Yeah.
I brought that up. Oh, that's the second one?
Yeah, that's the second.
That's-
one.
No.
No, that's not it. I brought that up.
Rolled into one. But just to finish what you just said about being smart people and him, Pat, not being a good advocate.
I
for
didn't
these
say
things.
that.
It comes down to marketing. You could have a shitty product and great marketing, and you're
Yep.
going to blow out the competition. It's no longer, people don't read fundamentals, right? They read what Trump has to say that day. Give the guy 1,000 shares in stock, and he's gonna Trump tweet you, and it's gonna take off. It'll be $1 billion overnight, because that's kind of like where we are now.
So, I mean, I can kind of compare, like, if I rewind my whole thing, where what made me the difference between continuing to work part-time and just trading is back in 2020, when I was still a mechanic, I'd be leaning on my toolbox trading stocks because the shop was empty, and I still had to be there because I was an essential worker, whatever. But I'm sitting there just selling puts on every REIT that I could find that was just beat to hell from that drop down, and they all paid dividends, so I would be able to calculate the dividend, figure out about where I'd get into the stock, selling a put. That's the strike price. Cool. Sell that. collect the premium, dividend would pay, stock would drop. If I was assigned, cool, I'd take it on and flip it to sell covered calls on the outside. Just an income strategy, and it builds up so fast when you're on both sides of it, selling both puts and calls just on the market swings. And dividend stocks are great because they kind of tend to trade in a very tight range, and you can just plot those calls and puts above and below all day long until you eventually get called away. So it's kind of it's supercharging the way you would build an income strategy into anything. And what you're saying is being able to borrow a little bit from some other country at like 1%, and then you're yielding at least 12% on this end. That's a no-brainer. It's very similar. You're just trading one for the other.
I like the fiduciary idea better. And I mean, let me know if you want to do it. I would work with you on that. One of the things I'm thinking, so you've got like a T-spot, and Bloomberg, I mean, I don't know what the yield is. Bloomberg says it's 14.5%. So let's assume that's accurate. And we're writing calls on SPY every day. Let's say most of the time we're keeping that premium. I mean, I know we got crushed on like the day Trump told everyone to buy, but I think most of the time we're keeping, all of that premium. So let's say instead of spending all of it, every day you were taking half. And for argument's sake, maybe you're buying calls on IBIT. So you've got SPY exposure, IBIT exposure, and a 7% dividend. Something like that. That could be interesting.
That's rational.
Yeah. I mean,
why 7%?
What's that?
Why 7%?
I'm saying you take half.
Okay.
So you're still generating some yield.
And you get the upside exposure.
So Dan, do you own any symbols like they have your name like cash in it or anything like that? Because Matt will be collecting some of those real quick.
I bet you cash is already taken.
I don't know, but I feel like I should have patented them before I copyrighted them before I came on the podcast.
I know, right? Like Cash One, Cash Money, CASH.
Well, I mean,
what else can
the
you...
symbol cash has been taken.
I've got a ticker that I'll tell you after the broadcast because I think it'll get snatched if I say it.
So I want to make sure that we covered the idea. We've discussed the second idea. It's one of these three.
No. We haven't discussed the second one.
All right, let's go to the second idea.
All right, so I'm going to
wait. You want us to sign an NDA before?
No.
Right.
So this is the second one, but I'm going to give you guys a caveat, some information first. The end of 2024, we owed $8.558 trillion between foreign and domestic treasuries, but we only collected $4.9 trillion in tax revenues, so about half. Right. So as we're continuing to print more money, people are going to be either flowing towards, gold futures or Bitcoin. Right. So now we're talking about Bitcoin becoming the stable asset, right, of the government. Yeah. They had 200 trillion that they stole from the guy from Silk Road. They sold 100,000 or 100 billion or whatever worth of Bitcoin. All right. So they got 100 left on their balance sheet. All right. If that becomes the stable, think pre-1971 Richard Nixon when we were on the gold standard, how do we create a leveraged product off of it, making a some sort of kryptonization of the Bitcoin, whether it's XRP, something that we can print and transact with. Bank of America, I think it was last year, is using XRP in cross payments. Okay. Now XRP's Ripple, by the way. Yeah. So how do we go forward with that? Could we create an ETF that could be like a leveraged? Because you can't leverage Bitcoin, but you could use it as the stable to say, hey, if we pay you so much. You can leverage Bitcoin. Actually, we have a 2x long Bitcoin. Yeah. And we have a 100% crypto, 100% precious metals ETF. But sorry, keep going. But I mean, Bitcoin itself. I'm not talking about an ETF, but a Bitcoin itself, you can't leverage it. Okay. So if the Treasury is going, how do we make Federal Reserve notes on the Bitcoin? Do they create like an XRP or an XLM or whatever that they can lend out and say, hey, look, every one of these every 100 of these is going to be 0.0001 worth of Bitcoin. And we're going to hold it. And you guys don't know how much we have. Well, I guess they will because it'll be on the blockchain. And we're going to hold it as a safe asset.
Hey, you got to talk to us like we're fifth graders, bro, because I think we're all lost on this one.
Well, we were talking to, about the custody. Dr. I'm horrible with the names.
David
Watts. So
David Watts, yeah.
we're talking to him about custodians, and that kind of makes sense because you would need something to be stable enough to be considered a tangible currency, to a store of value, and then you would need to be able to transact in and out of it. So it would essentially be that. You'd have to have a stable coin, and you can transact to one side and the other. It has to be exchange.
Yeah, but how do you make money, though? How do you make money? That's the question. I kind of get it, but how do you make money then?
The transaction cost. So the money is going to be made. It's not going to be made in holding Bitcoin. That's kind of like a mathematical fallacy because you can't. You're just going to have it to infinity, and then eventually it's going to be too costly to hold or transact in, right? Which gives it its whole.
I got it.
It's like holding artwork. It's like holding a Picasso. You're not going to sell it, right? So people are going to make money in the transaction, in the miners, in keeping the node alive, and you're going to need a cryptonization or some sort of tokenization to transact back and forth, like we do with fiat, like when we had silver certificates backed by gold.
That was the secondary
market. We've been talking
market.
about this, kind of. We've been talking about this. But so in essence, you would be, since you say you can't leverage Bitcoin, but you would somehow tokenize Bitcoin in a way you can transact with it, and then you'd make money off. So if you own one Bitcoin, you could tokenize that in some way. I don't know if that's the right way to phrase it, and make it a transactionable item where then therefore you could charge a fee on it. Is
like
that
a promissory note. Yep.
Yeah. And you can't leverage it, but you could say you could be issuing 10 Bitcoin notes for every Bitcoin you own, so you could tenfold the transactional amount, is what you're saying, kind of, right?
Yeah, and you'd make money in the cross platform.
Yeah, I guess. Yeah,
does right now.
That's a big story to sell. I mean, for Matt, was talking about marketing. I mean, if it took us this long to figure it out, I mean, I don't know. It seems like a tough, long story, but I don't know. Maybe not. It's a good idea, though.
That is a good idea.
Maybe so. All right.
I just think it's the way that we're kind of moving right now, though.
Yeah, no.
With the government and everyone's news saying, buy Bitcoin. My entire Instagram right now is with government, people saying you should just buy Bitcoin.
Okay.
And once you start tokenizing, pretty much everything can be tokenized. I mean, I could go tokenize, the mouse pad under my mouse here, whatever. It's an asset. It makes sense to be the guy validating the transactions, and that's where your fees come in. I mean, you just have whatever your fee is for holding a transaction in custody and then trading from one to the other.
All right. Well, let's tape.
That's the node.
Right.
Yeah, I got it. Let's table that one for now. It's a little complicated. So let's move on.
That's
so you talked about pivotal point theory, Dan, which is like a trading. Do you guys understand that, Jeremy, Matt? It's a technical idea, correct?
Yeah, I don't. I naturally, I actually kind of go against it, and the idea is that you keep buying in an upward trend and you sell as it goes down.
Yeah, I wouldn't do that.
To me, that sounds
I do the exact opposite.
So you were dissing that, I see. Okay, because you mentioned that. All right. So then
a lot of people follow that, and then they get, and then it hits the top, and then they're like, "Well, I didn't hit my 70 RSI," and then they're holding. Then they're bag holders all the way down. And they go, "What the hell happened to my fund?" And I'm like, "Well, why didn't you sell when you were green? You should have been taking profits. Why would you be buying in an upward?"
That's why I set price targets. Yeah.
Well, and what I do is I'll use like counter trend types of methodologies where, like an undercut and rally is one of my favorites. But then, when you've rallied above a key moving average or a key low, chances are it's right there. So you can have a pretty tight stop, which means your position size can be relatively large. And then as it moves away from that point, you can be selling into that move. And then, once it starts to look toppy, at that point, then I've got runners and, and it doesn't matter. But then, if it goes down and I get another undercut and rally, all right, I can add to my position again. I keep going. That I prefer.
So what's your chart du jour, Matt? Like what if I said, what's the best looking one today? You have one?
I mean, I'm talking to you guys.
No, the chart.
No, but
you-
I don't, I mean, I used to, like, I'll
no.
watch
I'm
the
saying,
game.
like, what do you like today? Like, what stock do you like today? If you were going to talk
I
about,
have no idea. I'm talking to you guys.
oh, got it.
In my watch.
I pointed out EQT this morning.
I get it.
Have a look at that one.
Oh no,
I
EQT.
did not like that EQT chart.
How about you, Dan?
What do I like today? So today I'm scalping, and so I'm taking profits from like my Forex S&P, anything that I'm scalping, I'm taking it. I'm just buying dividend income, and then it's just free flow. Like I don't have any personal cash into it. It just free flows to infinity. I don't care what happens to it. I'll probably grab some PLTY. Because since YieldMax changed their perspective and they paid a $7 dividend last month, which is stupid.
No kidding.
But if it's free flowing cash flow, I don't really care.
All right. So on that note, why didn't you talk about our fund and our TSL fund, our Tesla fund, instead of like Roundhills or whatever on your
Ours doesn't have a dividend.
Right.
Oh.
Yeah.
People want
We'll have a
dividend,
zero
income.
DTE on Tesla. We may do a put right on Tesla. So we'll have something for him to talk about. But right now we have on Tesla's 2x long and 2x short.
So that's important you guys talk about that, right? Because that's kind of what I was leading to, right? We have ever since COVID, we have the whole quiet quitting.
Right.
Gen Z doesn't want to get married. They don't want a 30-year mortgage. They're renting Ubers. They're getting their food delivered to them from DoorDash.
Right.
They just want income without having to actually like go swing a hammer. Right. So they want the income. So that's kind of where like my audience is around, is just income investors. And how do you gain, like loans to capture the difference, or margin stack the difference, or get loans, bank loans, and margin stack at the same time to get, 200x in your dividends.
I love it, dude.
A lot of people are doing that.
You're leveraging debt, and as long as you can make enough to service the debt above the debt, service line, you're good.
Yep,
Sweet.
exactly.
So you also talk a little bit about AI, Dan. Government. You said government AI. I made some notes here. I wish I would have made better notes. But any thoughts on AI today?
AI is interesting because it's so like General Dynamics and what is it? SunTrust Bank? Or sorry, no, Hyundai, and I think it's SunTrust Bank own General Dynamics in Boston, which is one of the largest AI companies. It's not publicly traded. Well, obviously you can buy Hyundai, I guess. And they have AI right now that'll replace your roof. It's degenerative in nature, so it's just going to replace the workforce. 20, 30 years from now, you're going to have your house just built by AI.
All right.
So I think that's kind of where it's going.
All right.
That makes sense.
Any thoughts, Matt?
I mean, you know how I feel about AI. I mean, you want to be invested across the AI spectrum. You can use AI to, enhance everything you're doing. I actually played around this weekend. I tried to get AI to do a daily and then eventually an intraday analysis on my watch list, to be able to tell me, all the patterns I like to look for,
Right.
Where they are, so I don't have to look at them.
Right.
And, I started off and I asked it, hey, can you do this? And it said, oh, yeah, definitely. And then I said, all right, here you go. It can't. But my feeling is that when AI tells you it can do something and it can't, that means it's some point very soon it will be able to.
Right.
And that's going to be really cool, because the biggest issue I have with my trading is just not having enough time. I mean, we're here talking. I'm not looking at the markets. I mean, I got stopped out of my SPY puts, but I made sure to do that. But beyond that, I'm not doing anything, and I have calls all day. It'd be great to have AI just be able to scan every single one of my charts and be like, hey, Matt, take a look at this, take a look at this. So it's not there yet, but I bet you it's going to be there, month, 2 months, 3 months, 6, whatever.
Yeah, I agree.
I-
Totally agree.
I like to have
Go
it
ahead, Jay.
critique my strategies, and it does not like my wheel trade strategy. It tells me you're
Well,
taking on
but
too much
so
risk because I'm in leveraged stuff. But
Right. But you need to talk that through with it.
Right.
The first thing you got to do is you've got to make it understand, options.
Yep.
Because if not, it's going to talk to you like you're an idiot.
pretty
And
much,
then you need to push back, not too forcefully, because you don't want AI to just like flip and be like, all right, well, Jeremy's the expert. Okay. But you need to push back a
Right.
little bit. But then I would also ask it. So I would ask it to rate your strategy. And let's say it rates it a 6. Then I would say, all right, what do I need to do to get it to be a 10? And see what it suggests.
see it.
Right.
It kind of when I told it what my current cost basis was on some stuff, it's like, whoa, holy crap, okay, yeah, keep doing that. But
Well, right, yeah, I mean, you can, it can be like, oh, your strategy's a 6, and you can be
Right.
like, well, but I bought this at the, oh, okay, you're right, it's a 9.
right,
Right.
and then the only thing I came up with from that was that I can turn it into a hybrid strategy where I can do both the levered positions as well as the underlying positions at the same time, and it kind of boosts my returns on the underlying positions without taking on as much risk because I can lever against the income from the underlying positions, similar to what you would do with the dividend payment, using that to leverage yourself into calls on something. Kind of is the same thing for the leverage product. I made AI write me a prospectus on how to do that, and I'm tweaking it as I go, and it looks better and better and better the more I play with it. So you're right. I mean, once you give it a little pushback and say, hey, this is how it works for me. This is what I know. What I want from you is rate this in a way that makes sense to me as far as, is it worth my time to continue pursuing different tweaks in this to make it better? Or would it be better just to leave it alone and keep doing what I'm already doing?
All right, we're at 8 minutes here, so
Yeah.
I want to slam through just a couple quick things. So you talk about Bitcoin Treasury. I'm a little skeptical all of a sudden. Where are you, Dan?
For our Bitcoin treasury?
Yeah, MicroStrategy or GameStop buying, 500 million worth of Bitcoin. Where are you at on that?
I'm not a game. I went to the GameStop store yesterday when they're closed down.
All right.
I don't know what their long-term play is. I know people like trading them.
Yeah.
Other than that,
Right.
like their fundamentals are trash. It's like whenever
We just did a 2x, by the way, but I will not take any offense. We did it because I knew they were going to start buying Bitcoin.
All right, so you have 303.
Oh, sorry. No, I love it suddenly. My bad. I love it. My bad. I'm not skeptical at all.
No, it's not my. I won't trade anything that I don't understand.
Oh, cool. So,
That's
Matt,
my
where are you on?
first
Where are
thought.
you on the Bitcoin Treasury theme?
So
Um,
I
sorry,
think
go on.
when we're in a meme environment, those companies are going to do well. I think you want to trade them.
Got it.
If you are a long-term investor, just go and buy a Bitcoin, a spot Bitcoin ETF.
Right.
But, if you're a trader and you can trade in and out of this stuff, I sold a bunch of the Bitcoin treasury companies on Friday. I sold a few more this morning before we got on the podcast. So I don't, beyond DJT, which I think is more than just Bitcoin treasury. I probably have very little, if any. Oh no, I've got UPXI. That's Solana. But I've cut my exposure a lot. But I'll add it back on. I'm just, I wouldn't just buy it and hold on to it forever.
Got it. All right. So, Dan, I'm going to make a little personal attack on you here now. So, I see that you were just in Washington, D.C., right? I saw on your Twitter that you went to all these monuments and all that. You guys are all on the East Coast. What do you think of Washington, D.C., Matt? It's just a place to go, check out. You into it?
I mean, I go actually probably once a quarter because our ETF, one of our main ETF boards has a board meeting out there, and I sometimes have no choice but to go in person. So I'm going to be in DC, I think in 2 weeks.
Oh, yeah? Are you a museum guy at all? Do you go to like the
I
Spy
think
Museum or anything?
once you've done it and you've seen everything,
Yeah.
then, beyond that, it's not it's not my favorite city. I'd rather
No?
hang out in Boston. Boston's where I'm from. I'd rather hang out in Boston or New York.
Right.
But
Got
if
it.
you haven't seen all this stuff, go and see it. But then
Right.
once you've seen it, it's like, all right, I don't need to see it again.
You can't go to like the same museum 3, 4 times and just like the museum out. No, you
No.
don't do that. No, I got it. Okay.
You see the White House, you see the monument, you see Congress, and then the next time you go, you don't.
Got it. Okay. What about you, Dan? Same thing. You're shaking your head a little bit.
I went back in 2002, and
Yeah.
it was kind of a rough place. But now that I'm an adult, so what happened was it was my son's field trip thing, and the school wanted some crazy amount of money, and I'm like, let's just you and I go, and we
Right.
had a blast. And that's the only reason I went to DC. But I'm like, this is pretty cool. I got to experience it as an adult. I probably won't go back again, but I'm with Matt. I'd rather double park in front of Mike's Pastries and
Right.
personally, but I'm more of
Right.
a Northern guy or a Newport. I like Newport.
All right.
Newport's great.
Yeah. I was just out in DC like earlier this year. I loved it. I'm a museum guy, but anyway, okay. One more moving forward. All right. So let's talk about the Celtics. So I know that you have some friends on the Celtics, Dan, or the ex-owners. Matt's a Celtics fan. Anything to discuss there?
Other than the fact that you can't spit on the grass and you have to walk in like a checkered pattern up to their front door because there's cameras in every room with the exception of the bathroom. That was about it. Their basement's super cool. They have it was the first time I had ever seen the cooling from underground. The big tubes, instead of using like a gas furnace, they have the giant tubes that go like 200 feet underground and capture the Earth's temperature. And that's how they cool their entire house. So that was kind of cool. Other than that, it looks like a basketball court with like Celtics table side chairs, everything. Their entire basement's decked out like the gardens.
Oh, sweet.
So
it's
that's
parquet floor, all that.
Yeah.
Or do they even do that anymore?
No, I don't think so.
Oh no! Do the Celtics have a parquet floor now, or not really? No, right?
Yeah.
Oh, they
Didn't
did.
go anywhere.
Oh, okay. All right. So, you said you're having a conference this summer. Is that true, or is that still on taps?
It is, but it's against one of your. So.
We don't talk about the other guys on the show.
All right. So someone else is going to. He offered up his restaurant as a place to hold it. I wanted to try to get all the retail investors together as like a meet and greet. It's going to be in Needham. We were going to try to do it in June, but everyone gets out of school then. They had plans with their families. So we're going to try to do it in August. And I think it should be great. Get just a bunch of retail people together and just kind of chalk it up and see if we can make it like an annual event.
Let me know, because one of the other things I may be able to do is I may be able to get like a market maker or two to pay for the whole thing.
Yeah, we'll pay you more, dude. Ask the other guys.
That'd be cool.
Losers. Ask those losers.
It'd be like the Comic-Con for traders. I like it.
Yeah.
Yeah, like cars and coffee, I don't know, stocks and coffee, or
there you go.
Stocks and beer.
Yeah.
Hey, I'm down.
All right,
Send me an invite.
Pat, I got an 11 o'clock.
Yeah.
Where can people find you?
On X, it's I think it's cash_66. You guys can find me on YouTube, Facebook. I think I have the largest Facebook in Massachusetts. So you guys can just look up Dan Cash. And that's pretty Instagram, whatever.
Yeah, YouTube, it's at Mr. Cash 66.
Yep, and it's in the description.
Right. All right, guys. Cool, Dan.
All right,
thank you. See you. I'll see you in a bit, guys.
See you guys. Great call.